Joe Hockey has brushed off the gloomy economic predictions from commentators. The Treasurer says Australians should be proud of having one of the fastest growing economies in the world, and that naysayers risk looking foolish with their forecasts.
People talk about dark clouds or recession. They're just dead wrong. Dead wrong. And when you've got one of the fastest growing economies in the developed world in the first 3 months of this year, for some people to talk about dark clouds on the horizon or recession, they're just made to look like complete fools.
Labor tried to dampen Joe Hockey's bravado in question time today. Shadow Treasurer Chris Bowen asked the Treasurer no fewer than 5 questions.
Treasurer, why is annual GDP growth well below trend at 2.3% and well below the level of growth needed to address unemployment? Why is the government forecasting the highest unemployment rate for 14 years? Why was there zero growth in domestic demand in the March quarter? And why was there zero growth in retail trade in April? Treasurer, why has Australia experienced for the first time since the global financial crisis its 4th consecutive quarterly decline in living standards?
Labor just constantly talks down Australia. They constantly talk down Australia. It's no surprise. They don't quite get it. Well, you know what? I'm very proud of my country and I'm very proud of where the economy's going.
The stoush comes as Australia posts its worst monthly trade deficit on record, with imports now exceeding exports by nearly $3.9 billion. Now, to separate fact from fiction, we're joined by economist Stephen Koukoulas in Canberra. Stephen, welcome to The Drum.
Good afternoon.
Now, can you spell out for us what your view is? Is the Treasurer right to dismiss those predicting risk of recession as clowns?
Look, he's largely right. There's very little prospect of a recession. We've got very low interest rates. We've got a falling and a floating exchange rate. So if the economy weakened from here, we'd see lower interest rates and a lower Aussie dollar. So, look, the economy's not strong. We are growing below trend. We have been for a couple of years. The unemployment rate's too high. But to forecast a recession in the current environment seems just a little absurd. I've been around long enough to never rule anything out, but it looks to be a very low probability.
And what about the question of a housing bubble? We have the OECD, the Treasury Secretary, warning of it. Now, the Treasurer is saying that this is all defined by supply. We need to not be concerned because of that. How do we define a housing bubble, and are we in one?
In Sydney, we probably are. The definition is just ridiculous prices with people rushing to buy with high degrees of leverage, so they're borrowing the bulk of the purchase price.
Tick, tick.
Yep, and the prices are extraordinary. Many multiples of household income now, above all the long-run averages. So you'd say probably there is a bubble in Sydney. The issue is, how does it unwind? It can't continue forever. So the question that's rather, is there or isn't there a bubble? It's the question of, how does this price pressure, the bubble in Sydney, actually unwind without there being some negative effects in the whole economy? And I guess the question, again, Mr. Hockey's right. It is a supply side issue. We have to build more houses because we know that population's increasing. We know that everybody who comes to Australia want to live in either Sydney or Melbourne or the main cities. So the underlying demand for property is going to continue for a long time. We do know that to address that, of course, we've got to build more dwellings for people to live in. And so that's the best thing to fix the bubble, if you like, in Sydney, rather than necessarily just relying on higher interest rates perhaps, or a tightening in credit conditions for the banks when they lend to people.
Right, but the question is as well, if you said that there certainly is one in Sydney, and obviously people always mention Melbourne, where there have been very high prices over a sustained period as well, if this is not a national phenomenon, what then economic tinkering or responses would mean for the rest of the economy?
That's the really good question, because, of course, you wouldn't want to be imposing the same restrictions in Hobart, for example, where prices are very, very weak, than you do in Sydney. So, again, it's a question where APRA and the other regulators can go to the banks and lean on them. I guess it's not the question of imposing a strict regulation necessarily. It's just enlightening the banks about not lending too much money to investors in particular in Sydney. And indeed, if the bank risk managers were worth their salt, they would be saying that, hang on, we don't want to be lending money now at the peak of what could be a bubble that could burst and leave us with bad debts on our books. So again, the risk managers in the bank should be thinking about how much they're lending, who they're lending to, and again, at the peak of the cycle, if we do get even a modest correction in house prices, if they drop 10%, that means that everybody who's bought in the last little while will be out of the money and vulnerable to defaulting on their mortgage.
Right, what do you think about this, Rebecca?
Well, I think that really the issue here is it is correct that this is a supply side problem, but the sort of policies we need to be looking at are actually government policies. For example, the price of housing in Canberra is very high, and that's because the ACT government gets its revenue from selling the land. So it wants to have as much revenue as possible and often spends it on things of dubious value instead of thinking about actually making housing more affordable for people in the ACT. It's also true in Sydney. For example, that Bob Carr said Sydney was closed, Sydney was full, he stopped releasing land, and we saw the house prices go up very dramatically during that whole period. Now, there are other things as well that make housing very expensive for people who are entering the market. For example, all sorts of regulations have been put in place. For example, in many suburbs, the local government says you can't have a one-bedroom flat that's any smaller than 70 metres squared. I mean, it's just absurd. That, of course, is pushing up the price. You now have rules saying when you first build a house, it has to have a lawn in, it has to have a water tank, it has to have all sorts of things that all add up, push the cost up. I mean, a couple of decades ago, you bought the house and then bit by bit you planted the garden, you put in a water tank if you wanted a water tank, and so on. All of these things are adding to the cost, and particularly at the bottom end of the market. It's very unfair, but it is something not that the federal government can deal with, but the state governments and local governments definitely have to.
Jonathan Green, what's your take on this? I mean, Stephen Koukoulas has been saying then that we need to, bankers need to be looking at their lending practices. One would imagine they're always scrutinising their lending practices. The question is, should they be changing? Should they be responding to comments by the ASIC chairman, for example, that they be lending at a rate of 7%, long-term realistic rates, instead of lowering them?
Well, it's clear. I mean, in Sydney, you've had since 2012 an almost a 40% increase in the value of properties, which is absolutely extraordinary. And it's that amount of increase hasn't been enough to slow the demand. And that would tell you that you have this supply issue. If you look at the last year in Sydney and compare houses, for example, to apartments, units have gone up 8.1%, whereas houses have gone up double that. And in units, there is a strong supply. So, yes, we do have an issue here around with the supply of property. And I think in terms of government policy, well, yes, land and regulation, as Rebecca points out, but also things like negative gearing, have to come into that equation. There have got to be some hard questions asked about the sort of policy positions we have, which might be unpopular, but are also driving this kind of interest, apart from which people should move out of Sydney. They should move to Melbourne.
Stephen, just quickly, what kind of impact do you think that the changing or at least limiting the practice of negative gearing would have on pricing?
It would help at the margin. Obviously, the investors are really happier to risk their money to negative gear a property than they are to pay a bit of tax on it. So, again, that is clearly one factor that's been driving the property market. But again, it's curious it hasn't happened in Hobart or Perth or Adelaide or Brisbane, for example. It's a Sydney-based thing. So it tells me that it's not just negative gearing that's the critical issue. On the supply thing, it's curious that, again, in London, 7 or 8 years ago, there's the same problem. There was strong demand for property in London, there was limited supply, there was low construction, but we know that London house prices dropped 25% during the GFC despite the supply and demand fundamentals, which goes to show that there are other factors that do drive house prices, and it's the success of the economy, it's the unemployment rate, it's interest rates, and it's bank credit. So again, there's many complexities that sort of underpin the house price bubble situation in Australia. Not many of them are turning negative at the moment, although having said that, we do have to acknowledge that there has been a big pickup in construction in the last year or so, and when that construction is finished and the apartments and houses are available for people to live in, maybe we'll get the supply side response, which will put a bit of downward pressure on prices then.
Right, LJ, how concerned do you think we need to be about the trade deficit, the worst on record? Some of this to be expected in terms of the drop in coal and iron ore prices, but economists themselves saying they're surprised by it.
Well, I mean, the iron ore price has actually just picked up again in the last little while. But if you look at how exposed our economy is in terms of exports and the trade deficit, that concern is being reflected in consumer confidence and corporate confidence being at traditionally low levels compared to what they have been historically. So it's definitely an area of concern.
What do you think, Stephen?
Look, the trade number you saw today, yes, I almost fell off my chair when I saw the 3.9 billion monthly deficit. But then when you read the ABS report, we did see that there was the big drop in coal exports based on weather-related factors. And apparently there was a machine worth $1.2 billion that was imported from Korea. We think it's a tunnelling machine or some sort of machinery linked to the mining sector. So those two issues alone accounted for about $1.75 billion of the deficit, and they won't be there next month. I think this is a quirky number, but nonetheless, we're still running trade deficits that are probably too wide, even allowing for these quirky one-off things.
Right. Stephen Koukoulas, I think by the Treasurer's new yet narrow definition, you escaped the categorisation of clown. Always a pleasure to have you on
this
the
issue
Drum.
only, I suspect. We'll see what he says on other matters.
Thanks so much for joining us tonight,
Thank you.
Stephen Koukoulas.